Here we have a trade review of ticker symbol JPM. This is JP Morgan Chase. Uh, this is stock in the financial sector, and as you can see, just like pretty much everything else in the stock market in general, it has been struggling. Really, this since last fall, it's been on the struggle bus. But you can see today, we'll zoom in a little bit, but it was a huge winner for us. Big trade, and really happy with it. We'll get into all that in just a second. So it came up on the scanners right here. Again, we'll zoom in. You can take a closer look at it. End of yesterday. And when it came up, my first thought was to stay away from it, if I'm being honest, because, we're at yearly lows. It's really struggling. However, after looking at it more, it just kept intriguing. I kept coming back to it. Like, I didn't originally put it on my watch list, but I did keep coming back to it simply because the more I looked at it, the more intriguing it became. And that is when I did a little, because support and resistance does not come into play right here because it is it's in uncharted territory right here. Unless we went back farther than a year, and that's not how we traded on our trading systems. Not saying you can't, it's just not how I do things. But support and resistance didn't come into play, but what did was candlestick analysis, which is something that I go into pretty decent detail in my income genesis course, and the importance of reading a candle, not just a chart, but reading the individual candle. So when we look at this candle on our signal, we see it was from the day before it was closed here, it was a huge gap down. And not only did it gap down, that's what, roughly 5 points, four in between 4 and 5 points, and it gapped down way down to here, and then ended up pushing even lower. Now, if we could take a freeze frame of what this candle looked like at when it was right here, think about what it looked like. It looked like a big gap down and a very bearish looking candle where we've come down a pretty decent ways after the open. Very bearish looking candle. However, the bulls stepped in and pushed price back up. So yes, we can look at this and see the type of candle it was as to why it showed up on our scanners. We can also look at it and say, we can call this a hammer, like a little bitty. It's really not a hammer, but you can call it that based on where the tiny little body is. But the way that what really convinced me was just picturing it and painting that picture of what this looked like as price pushed down and then pushed back up, that the bulls were really starting to step in. When we combine all that I just said with the RSI, where we are, and you can see, I don't know if I've ever mentioned it in these trade review videos yet, but I have my RSI set at 80-20, and I have the time frame set as, you can see it right here, as 3, meaning it gives more weight to the recent days. That's what's important to me. So that's how I have my RSI indicator set up. And when I looked at it right here, I could see that it was really overextended at the low, at the bottom here. And then even by the end of this day, we were still just barely starting to break out of that overextension range to the downside. So for me, the details that I actually had written down on it was a bullish candle after a yearly low, and it was severely overextended. So I did feel comfortable eventually taking this as a trade, and that is exactly what ended up happening. As we took it today, we can see that it definitely got triggered, and what we needed to see here was price get to 108.23. And when I say get to, usually we're looking for the break, but in this case we had a small gap up. So you can look up here and we can see the open was at 109.16. So we needed price to get down to 108.23 in order for us to enter this trade. That was our trigger. That was our cue to enter the trade, and it did fairly early in the morning. And because of the way it was coming down, I believe, I know I did, I'm not sure how many other people got pretty decent fills on it. I got filled closer to like 108.10 by the time when my order got filled. I think we'll look at it in the 1 minute, just a second, and see. Um, or it might have been no, that was a different. I had two trades today. The other trade I got a really good fill. I think I got filled right around the trigger on this one. Um, and the other one was a winning trade as well on ticker symbol ATVI. And you can take a look at that if you want to in your own time, but I'm not going to do a video on it, although it was a really big winner as well. So on this one, we got triggered, and everything, all of that is gone over in the war room each and every morning. I mention it in every video, so I'll make it fast. To all my standard and premium members, if they're paying attention in the war room, I go over the stocks that's on the watch list, the reason why they're on the watch list as far as the scanner that they showed up on. I go over the reason why I'm looking more into them for support and resistance, why I'm bullish or bearish on the stock, and we develop a trade plan, and I give it all out. I tell them exactly what to do as far as entering the trade and why they need to enter the trade, have conviction in it. And then past that, the only thing the individual has to decide, and what I have to decide myself, what you have to decide, is when to exit. And I always give 3 different scenarios for exit strategies on this one, or on these trades. And these are not the only 3 exit strategies. This is just to give you a little idea and a foundation, a little guideline of what you might want to use. So the first one we'll go over is exiting into previous support or resistance. In this case, we're going to exit into previous resistance as price is coming up into resistance. So 108.23 was our entry. That was our trigger. And the first area that I looked at, and it looks really close right here, and it kind of is, was the low. I guess it's not really that close. It's about a point away. Was the low right here, which was 109.3. That was my first area to look at. And let me zoom out. That's a little better. When you're zoomed in and it gets stretched out, it doesn't look as obvious or as clear to me anyways. So we got this level right here, right at 109.3, 109.3 or $109.30. That was the first level that I was looking at to take profit. If I was trading it this way, and I mentioned it in my previous video, but the way that I usually trade is the way I'm currently trading is what we'll go over next. But so I didn't trade this way, but if I was, this was the first level that I would have been looking at right here, was this low. And you can choose whether you want to take, some of it off, as far as like a quarter of your position off, half your position off, 3/4 off. When I do trade this way from time to time, it's really been a while, but I usually take the majority around the 2/3 range off at the first area, and then move my stop up to really protect myself. And yes, I don't think I mentioned it, but the stop is also gone over in the war room, and we have a very set stop, a very clearly defined stop, a reason for it, and it's what we use to determine our position size so that we don't risk more than what we're willing to risk. And we know exactly what our max loss will be if the trade goes 100% against us. So right here, take some profit, move your stop up. The second area for me was right here at the low of this candle, the day before the gap. That is a very clear area to me of resist. It's easy to see on the chart. That is why I'm saying it's resistance, because we have it's a wick. It's a pretty long wick after a gap down. So I felt that this was a pretty decent area to take profit at. And that low was at 110.38. So now we're over 2 points from our entry, looking pretty good. And then once that happens, you can take more off or the rest off, whatever you decide to do. And if it's just more off and you're leaving some to run that or potentially run, move your stop again, so that you're definitely making money. It's just a matter of how much. And then the third, it was really for this one, I couldn't have predicted this type of move was going to happen today. So for me, the third and final one, which at the beginning of the day, I would have said would have been insane. It would have been kind of a long shot, but I would have been very thankful for it, thankful to the Lord for it. And that would be to fill this gap completely all the way up to here where where that close was, which was 111.91. And at that point, we're looking at $3 and roughly 70 cents, a little bit less than that. So maybe $3.65 from our entry, which would have been fantastic. Again, that's just going over some things to give you an idea of how you might want to exit. The other exit strategy, the one that I trade with right now, and it sounds crazy, but I promise it works. And that is once we trigger, we have our stop set with, peace in our mind that we've already come to terms with. If things go absolutely against us, what our max loss will be. We've already got peace about it. For me personally, I've prayed about it and I'm comfortable with it. And it's from there, I just let it ride the rest of the day. And I will move my stop. So when this becomes like really profitable, I'll move my stop up. Sometimes if price gets, way if it got when it got way up here, I moved it, somewhere right in here so that, I'm still making a good chunk if it were to come all the way down. However, it didn't do that. And, I talk about it all the time that doing this strategy, you will have some winners that turn into losers. There is no question about it. There's no way around it. However, you can also catch some really big runners. I mention it. I talk about it every time I talk about this strategy. And this is a good example of it, of catching a really big runner. We closed at $112.95. That is $4.70. Think about that. $4.70 above our entry on 100, and at the time it was when we entered, it was less than $110. Fantastic trade. It's the way I traded it. Wonderful trade. Exiting or entering when it triggers, have the stop set in place, and just closing at the end of the day. The third and final exit strategy is scalping it, and this would have been a pretty decent one as long as you had a good stop set in place. Because 108.23 was our entry, and that did happen. I said it was pretty early, 9:34. So 9:34, 108.23, which was right around there. It did pop a little lower in that same minute by 5 cents. You can look up here and see the low was 108.18. In the next minute, it went up by 40 cents, over 40 cents. That would have been a pretty decent trade. Taking 40 cents on that from a scalping standpoint, that's pretty good. However, if you held it, you either would have gotten stopped out, or if you use the stop that I recommend, yes, your position size is smaller, which means your profits will be smaller. However, your risk is clearly defined. You know exactly how much you'll lose if the trade goes against you. If you had that set in place, you were good, you were golden, and you could have, taken profit anywhere in here if you wanted to scalp it that way. If you didn't take it in that first 40 cents up here. Really good trade all around. No complaints about it. Very happy, very excited to be able to share this one with you to show you that, yes, sometimes we do catch these runners when they happen, and we've just by following technical analysis. And in this case, what really made the trade was the candlestick analysis. And that's something that I do go over in my Income Genesis course, which you can find at armortrades.com if you're interested. But that about wraps this video up. I really do appreciate you for watching it. Thank you so much. If you enjoyed this video, please like, share, and subscribe. Again, thank you for watching, and God bless.